Welcome to the show. Let me start by saying I'm not a financial advisor. This is not financial advice, and this information is intended for entertainment and educational purposes only. It is February 18th, 2022, and this is a weekly update for MMTLP and MMAT. So let's start off by looking at the overall markets in general. We see mostly reddish and dark blackish, maybe. So we see sideways to downward action, mostly downward, not too much green there. Little pockets of green, but not very much. This goes up a little bit, but in general, mostly red. And the reason for that, according to the Wall Street Journal, is that, we're talking about Ukrainian invasion. So we're talking about, threats of war, etc. So everything's down as a result. Dow Jones is down, S&P 500 is down, Russell, Russell 2000 is down, and everything's down. So basically, it's this idea of war is not great for the economy in general. Okay. So getting that out of the way, let's talk about what metamaterials and metamaterials torchlight preferred shares are. Okay. So metamaterials is a company that is they're working on the next generation nanostructures, and they do metamaterials, right? They do structural engineering at the micrometer and below level, at the 1 micron. Well, maybe a few microns to below, right? It's bigger than a semiconductor, but it's not. It's still pretty darn small. Okay. Anyway, so that's what metamaterials is about. They do next generation nanostructures. What is MMTLP? They're actually an oil and gas spin out. So what happened is that metamaterials and another company called Torchlight Energy, they merged, and the Torchlight Energy oil and gas assets were intended to be spun out. And that's what the MMTLP stands for. Basically, they were these Series A preferred shares were provided to Torchlight Energy shareholders at the after the merger happened, and those Series A preferred shares wound up trading on the over-the-counter exchanges under the stock symbol MMTLP. And if you have those Series A preferred shares or the MMTLP shares, turns out that the Torchlight Energy oil and gas assets were planning to be sold. When they're sold, the dividend from the MMTLP shareholders will receive a dividend from the sale of those oil and gas assets, right? It'll be distributed equally among all the MMTLP shareholders. So they're two very different entities, really, but they're both associated with the same company. They're both, they came about because of a merger, and it's a very interesting story. Anyway, that's the overall take on it. So if you've never heard about it before, that's the quick 5-second wrap up about it. Anyway, so let's look at the stock price of MMTLP this week. We see that it ended the week at $1.80. It got as high as almost $2. It got as high as about $2 for a brief instant. Rapid rises on the 15th and 16th, all the way up to Thursday the 17th. There was a huge run up. Why was that? Why did that happen? Well, we'll talk more about why that happened in the week. If you look at the overall time frame of when when the MMTLP shares came into existence for trading purposes, we see that it was remarkably stable. It was stayed at $1.25 for a long time, and then suddenly this week it popped up. So it's quite interesting. Let's look at metamaterial stock. We see it ended the week at $1.72 or $1.73, somewhere around $1.72 or so, right? And if we look at it over the course of a year, it's been slammed downward. It was slammed downward initially in the June timeframe, around the merger timeframe and all that. And it was also slammed down in the October timeframe, by short sellers, including Carousel Capital. They came out very vocally about it, how they were going to short, or how they have shorted metamaterials, and why they think the company is going to go bankrupt, and it's a horrible company and all that. And they spread rumors. It's a standard short and distort methodology, and they drove the price all the way down to about $1.38. It recovered to about $1.90 or so, and it's been trading sideways for the last week or so, ending the week at $1.72, right? Because we know about what MMTLP is, that has to do with oil and gas assets, we should also look at the price of oil and see where that's been. It's been, the price of oil this week has been relatively sideways, I'm going to say. But overall for the year, it's been up significantly. If you look back about a year ago, the price of oil was in the 50s, the low $50 per barrel. Now it's about $90 per barrel, and it's I would say it's headed upwards. Just FYI, if you're not aware, JP Morgan has announced that they believe that the price of oil in 2022 will be $125 per barrel, and they were projecting $150 plus per barrel in 2023. This is all without any, this is all without rumors of war and all that. That they're just looking at raw supply and demand, looking at how much oil OPEC can provide, that kind of thing. Bank of America also stated that they think that the price of oil would be around $120 in 2022. Again, this was prior to any talk of war, right? If war happens, the price of oil goes up can potentially go up dramatically. During the last Gulf War, for instance, the price of oil did not go up because there was a deal arranged by the president at the time and Saudi Arabia to supply oil. We don't know that such a deal would be forthcoming with this administration or not. Certainly, the Saudis don't seem to be wanting to supply or flood the world with oil. Anyway, so let's talk about what's going on. On Thursday, there were some rumors came out about Conoco Phillips buying out MMTLP. If we look at this is from a Twitter tweet. If we look at those rumors, the rumors had the number of acres wrong. It's 172,000 acres is what they were talking about. But it really should be 134,000 acres. So if the acreage is wrong, chances are that that the rumor is also wrong. Well, a few hours after the rumor came out, it got refuted by George Palikaros, the CEO of Metamaterials, and he basically said, "I don't think that's happening." He didn't say, "I am neither confirming nor denying it's there." He said, "I don't think that's happening." So it's probably not happening. Okay. Thank you, George, for clearing the air on that. Anyway, so I talked a little bit earlier about metamaterials and the metamaterials torchlight shares and what they represented. Now, if you are able to spin out or sell the oil and gas assets or oilco in a particular way, you can arrange it to be a non-taxable event. And I believe this is what what Metamaterials has been working towards, right? This means that the accountants are in charge of making sure that the right T's are crossed and the I's are dotted and all that to make sure that it's a non-taxable event. And why does that matter? Well, if you do it in a non-taxable way, it's pretty good. And one possible way that you can do it is via a stock swap. And there's a lot of benefits to doing a stock swap to both the buyer and the seller. So this is the benefits if, for the buyer, for the guy who's buying the assets, right? So the first benefit is they don't have to pay in cash. If you're not paying in cash, if you think about it, the cash that you have in the bank, that's cash that's already been taxed, right? So the income has been taxed already. So if you can do it via stock swap, it's similar to pre-tax money, right? Also, if you keep your cash on hand, you can use that to develop the new property that you've just bought, right? Also, if you look at a stock swap, if you're issuing more stock or whatever, for oil and gas companies, they don't really view dilution as a problem, right? Because they're exchanging the stock for new undeveloped oil-rich properties, right? It's basically virgin oil land. And this, you may even see the stock value go up, right? Because if you're an investor owner of an oil company and you see them buying new virgin oil land, that's a positive, right? That's like, hey, you're getting more oil. Good. I'm going to buy more shares because you got more oil and you can sell that more oil. And, as the price of oil is going up, great. Good job. So that's a good thing if you're a buyer, right? If you're buying that oil-rich land with stock, that's a positive. Now, what's the benefit to the seller of receiving stock instead of receiving cash? Well, you're getting stock now, but you're not getting cash, and that means you're not going to be, if the price of oil is increasing and you're getting stock, and that stock is in an oil company, and you're seeing that the price of oil is going to be $120 in 2022 or $150 in 2023, the price of that stock, you're going to participate in that rising oil price, by just holding on to that stock. And when you sell that stock, that's when you pay your taxes on it. So you only have to pay your taxes once when you sell the stock. So that's pretty good. That's a pretty good deal there. And so yeah. It's great for the seller as well. It's great for the people who are selling the oil-rich land. So, what can you expect if you're getting a stock swap? Let's say that the company that's buying your stuff. Let's just say maybe it's a company we'll call Marathon Petroleum. That's a real company in real life. They have a stock symbol MPC, and they're currently, I think they're selling for like $76 a share. So if the price of oil is $95 per barrel, and that means that there's probably about $63 of value per MMTLP share. So you divide 63 by 76, you get about 0.82 shares of Marathon, right, of MPC. So you can get about 0.82 shares for every share of MMTLP that's there. So that would be a way to extract that value. Right? But if you look at stock swaps, the company that's buying the asset for and actually providing their stock, they don't want to see the new shareholders just dump the stock on the open market and watch their stock price plummet. Well, stock price wouldn't plummet because it's not that much stock. But anyway, they in general don't want to see the new shareholders dump the stock. So they want to make the new shareholders really happy. And one way to do that is to typically overpay a little bit by about, say, 10 or 15%, right? So that means you got more stock than you would otherwise get with a straight up dollar conversion. And it works for the buying company, right? Because that oil and gas asset that's immediately put on the balance sheet as an asset, and it's valued at what they paid for it, right? And then it gets depreciated according to special IRS rules, which are totally unique to the oil and gas industry. They worked out a sweet deal with the IRS because they said that basically the cost to develop, the cost to get oil extracted out of the ground, it's very, very expensive. So Congress said, hey, look, we'll cut you guys a deal and we'll make it worth your while to actually get oil out of the ground. Okay. So they've got a special set of IRS rules that are unique to the oil and gas industry. That includes accelerated depreciation schedules and things like that. Who knows? I'm not an expert in that. So let's see. If you have a non-taxable event, which is what we were talking about, let's see what a calculation looks like. Here's a spreadsheet. I did calculations for anywhere from $30 per barrel all the way up to $120 per barrel, right? Per barrel. Right now, the price of oil is, say, at $90 per barrel. And if we look at $90 per barrel oil, I'll go through a column. I'll go through a calculation on a column with you guys, right? So the price of oil is $90 per barrel. We go to the price of oil to the $90 per barrel column. We look at we subtract $28 of COGS cost. That's the cost of goods sold. That's the amount of money it takes to pump the oil out of the ground. On average, EIA says it costs about $24 per for U.S. companies to pull oil out of the ground on average, right? I'm putting that at $28 just due to inflation, so I've increased that number slightly. So the gross revenue is $62, right? The value of oil in the ground is valued at 12% of of oil that's above the ground, that's in a barrel. So the dollars per barrel in the ground is about $7.44 at $90 per barrel. We know that the Torchlight revenue interest is only 49%, so we multiply that by 49% and we get $3.65. Multiply that by 3.2 billion barrels of oil in the ground, you get about 11.66 billion barrels of oil. Okay, this is a tax-free, or this is a non-taxable event, so the corporate tax on that is going to be zero, we'll say. The underwriter fee is 10%. Subtract the underwriter fee, and then you get about $10.5 billion that you're going to split across all the MMTLP shares. That's 165 million shares, and you get $63.66 at $90 per barrel. And this calculation has been repeated all the way down to $30 per barrel and up to $120 per barrel. I put the entire thing into a nice chart and included the settings on the chart so that we can use this chart for future purposes. We know what the what the inputs and settings are for this chart. So this is the estimated value of the dividend in terms of dollars per share for a non-taxable event. Right, price of oil is on the x-axis, and the amount that we can expect to receive in value is in the y-axis. So this is a non-taxable event. Right? When you add in the corporate tax, if you didn't do it in the non-taxable way and you wound up having to do it in a taxable way, I redid the entire spreadsheet. Just added 20% for the corporate tax. You get this chart. Okay, this is the taxed method of actually doing things. And as you can see, the values are a lot smaller, right? You get $49.51 at $90 per barrel, right? Compare that to $63.66 at $90 per barrel. Okay, so again, this is the taxed method. This is the non-taxed method, right? The whole chart goes up because you're doing it in a non-taxable way, right? The non-taxable event is what John Berta and John McCabe want. They have a large number of Torchlight / MMTLP shares, and it's in their interest to see that this whole spin-out happens in a non-taxable event way, right? And it's in your interest too, right? So they're working to. That's why it's taken till March, because they want to make sure that they're going down the right path to make things non-taxable. That's a big deal, right? This is the amount of money that you're winding up getting because it's a non-taxable event. Okay, you will have to pay taxes on it once you sell the stock, but at least you can let that grow. So so good job, John McCabe and John Berta. I mean, good job, John Berta and McCabe. Okay, great, great. So let's talk a little bit about where these oil and gas assets are and how you can find them, right? So there's a website called the Texas Railroad Commission, and they track all of oil and gas assets and oil and gas permits. Okay, so they're a .gov site, and the Railroad Commission deals with oil and gas. I don't know why, but apparently they do. Somebody smarter than me can explain to you why that's the case. Anyway, so in 2021 and 2022, they approved 8,882 drilling permits all across Texas. Is the map from their website. You can see what all this, where all these things are, where all these wells are. This is what a query is. If you wanted to find any approved, if you wanted to find a website, you go to this particular web page. It's an online query for the oil and gas data query, and you want to look for the drilling permit W1 queries, right? So a link will be provided, and I filled out the query over here with these three parameters: Hudspeth County, because that's where the Torchlight Energy oil and gas assets are; status, all status, and submit a date from, say, 2010 all the way out to 2022, okay? You fill out that query and you get 29 results, okay? And here they are. If you look at one of these results, this is the University Rich A11 result. That's what it's called. Click on it. You get this. This is a result of the query. If you look at this part of the query, you can see that this is the University Rich A11 lease. It's well number 2, District 8. It's in Hudspeth County. And you can see the API number. This is basically, the drilling permit. Now, with the drilling permit, you get GPS coordinates. And it's not in the same exact format as Google Earth, but you can figure that out and just put them into the Google Earth format. If you do that and you enter this data into Google Earth, you wind up here. Okay, I put a little pin for University Rich A11 here. Looks like a satellite image. I like satellite images, by the way. It looks like a satellite image. It looks like there's some white stuff on the ground. But if you look at it, this is a satellite image from 2020. Okay, so this is the satellite image prior to them doing much of anything. So this is what it looks like from the sky prior to actually drilling it out. Again, I went through the work of actually, making pins of all these all these locations to see what they look like. This is in Google Earth, and you can see that the dates of this are basically, January of 2020 is when the last satellite was updated. With these images. If you just look at the raw images, and you can notice yourself that there are some odd patterns in the land, right? Odd spots that look interesting. So I just put markers around the odd spots, right? If you do some further research, you see, and you want to see where the wells are, you can see these are the wells. The one exception, of course, is the University Maverick A24 well. That's got nothing on it because the date of the satellite is January of 2020. And they hadn't even gone over there yet. Now, there's one area that I was unable to identify, and I don't know why. It looks odd, but, who knows. Anyway, that one area is unknown. Maybe they did something prior to 2020 for all I know. So if we look at the A25 well, this is the A25H1. This is a satellite. This is the satellite image zoomed in. We can see that, looks like they're drilling something. Looks quite interesting there. This is the amount of detail that you can expect from a fresh satellite image. Well, this is not fresh. This is 2020. But this is the amount of detail that the satellite can provide at that particular time of day. This is from a drone. So this I just used the Wayback Machine. Because Torchlight Energy took a drone to their well, had it fly in the sky, and then took a photo, which was nice. You get a nice higher resolution photo, and you get some nice 3D looking effects. Instead of looking straight down, you're looking at an angle. Looks nice. Good job. Good job, Torchlight Energy. You're drilling that stuff out. This is what the B19 well number 1 looks like in the daytime. Again, drone footage, Wayback Machine. Looks nice. This is the same drone footage, but at night, Wayback Machine, and it's looks really nice. You can see the moon is lighting things up a little bit. Looks great. It's a B19 well. So remember, I mentioned that there was this weird rumor, and then George Palikaris just refuted the rumor. Well, you could tell. Roller Pigeons also looked at this earlier, and she said, "Hey, look, this is just wrong. And the number of acres is, should be 134,000 acres, not 172,000. What's the deal here?" So I happened to mention that I was looking around Google Earth at the Rio Grande Basin, right? So there's a reason I was mentioning all the stuff about looking around Google Earth, these satellite images, right? I was looking at Google Earth around the Rio Grande Basin, and I happened to notice that there was a refinery in El Paso owned by a company called Marathon. So that's where Marathon comes from. It's about 40 miles away as crow flies from the test wells. So it might actually make sense for a company that refines oil to buy oil-rich properties and just pump the oil and gas assets, you know. Just pump the oil out of there, send it 40 miles to their refinery, and then refine it, make gasoline out of it, and then, you know, ship that to their customers. Vertical integration. Sounds good. Anyway, Roller Pigeon says, yes, the refinery is 44 miles away. That's a major advantage. Okay. So this is Marathon Petroleum. This is, you know, you ask them what they do. They say they're a leading integrated downstream energy company, headquartered in Ohio. They happen to operate the nation's largest refining system. Nice. They're a public company. Okay. Their stock price is $78 per share. Yeah, they sell on the. I mean, their stock sells on the New York Stock Exchange. This is their 10-day chart. Okay, so yeah, they're doing quite. You know, I think they're doing quite well. This is their 1-year chart. As you can see, it's been headed upwards because the price of oil has been headed upwards. They're making money. They're doing good. So that's where they're trading. And they even issue a dividend, okay? And their dividend has been increasing. It's around 58 cents per quarter right now. It's that's almost 60 cents. It's about 234 per year. Not bad. So they have an annual dividend. Oh, 232 per year. There you go. They have an annual dividend yield of about 3.7%. Not bad, not bad. And they issue dividends, and their dividends were increasing too. So, let's just look at their Form 10Q. This is their income statement. They're making money. They made a $1.10 last quarter across 633 million shares. They got about $5 billion cash in the bank. They got about $89 billion of assets and about $53 billion of liabilities or debts. So you take the assets, subtract the liabilities, you get the book value. Divide by the number of shares, you get $56.81 per share of book value. That's what the company is worth in just pure book value. Okay, $5.8 billion cash in the bank, $1.09 per quarter in earnings. They're making money. They could easily afford to buy, this oil-rich land for stock, and they could easily afford to develop it. They got the cash. Anyway, so you look at them. They have operations from coast to coast. They got 13 refineries across 12 states, and they're refining 2.9 million barrels per day that's their capacity. In El Paso, they have a capacity of 131,000 barrels per day. They get about 420 employees that are actually working there. Okay, that's what their refinery looks like in El Paso. That's from their corporate drone image, I guess. Yeah, looks pretty good. It's a beautiful photo. This is a map of El Paso and where the Marathon Refinery place is, and the Marathon Refinery offices are, and also where the Torchlight oil and gas assets are. You can fit them on the same map. And here's the refinery offices. Let's just zoom in on there, see what it looks like. Yeah, looks like a building. Nice. And it also looks like they didn't spend too much money for that building. Good. They're actually giving the money back to the shareholders. Awesome. Here's a refinery. We see storage tanks. We see the refinery. Looks good. They're doing the refinery gig. Excellent. So, and if we zoom out, and we keep zooming out, eventually, yep, there we go. Eventually, you can see there's the oil and gas assets from Metamaterials and Torchlight. Let's just see what you can just zoom into there. And there's the A25 well. There you go. All from Google Earth. Nice. Here's what the refinery plant looked like. Just looking at the plant itself. Looks like a refinery. You know, you got your storage tanks, you got your, you know, your various different refinery stuff that you do. And if we look at how far away that stuff is, we can just measure it on Google Earth. Looks like it's about 40 miles away, and there's a road that's close by, 62. So they could actually put a pipeline close to 62, follow the road for the most part, until it becomes 180, and then just go up north at that point. Well, it's not a bad idea, you know. I mean, they could, you know, it's vertical integration. They could make a fair amount of money with that. It's awesome. It makes a lot of sense. Roller Pigeons made a video about Marathon. Apparently, I was not aware of this, but apparently they sold some convenience stores called Speedway, because, you know, they are a vertical. They are vertically integrated. They sell gasoline to end customers, you know, to you and me, and they have a convenience store there called Speedway, and they sold Speedway to 7-Eleven, I believe, and they got a whole bunch of money for that. So there you go. Check out Roller Pigeon's video. It's awesome. She talks about how they can basically buy this, you know, for nothing. It makes sense. Anyway, so remember last week I was trying to add up some stuff with Fintel.io. I was having issues with it and trying to make sense of the numbers. They just weren't making any sense. Well, Fintel.io, I said, has problems with their numbers because I couldn't understand what was going on. It was just bad. Anyway, so turns out they updated their numbers. Good job, Fintel.io. I should have just waited a week. Wouldn't have had to go through all that. Anyway, turns out that we now have insiders holding 60 million shares, according to Fintel.io, and institutions holding 64 million shares. So when we take 281 million shares, subtract the 60 million and the 64 million, we get 157 million shares left over. And that's basically what retail has, right? So that's all the shares that are left. Now, the reason for all of this stuff and trying to figure out how many shares exist for retail is I had a what if question that I was asking a while back. What if, you know, people take the money from the MMTLP dividend and just buy metamaterial shares with it? What would happen? You know, are there enough shares? Well, I took that and I said, well, let's see what happens if 25% of that money goes back into metamaterial shares. You know, there's about $5 billion that you can expect at a $90 per share per barrel oil price. You can expect to be getting something like $5.1 billion worth of money. And if 25% of that money for the dividend goes back in to buy metamaterial stock, that's about $1.286 billion. We know the current price is $1.72 per share. That means you could theoretically buy about 747 million shares. But there's only 157 million shares, and they've already been bought by retail. So there's clearly not enough shares there. If 1/8 of the money went back in, there's still not enough shares. There's about, and if 1/16 of the money went back in, there's still not enough shares. So there's a reason that I was doing all this, right? This is just saying, are there enough shares available at, if people were to buy back, metamaterial stock with the dividend? And clearly the answer is no. Now, I'm not saying that the share price will stay at that price if everyone starts buying it and there's no shares available, but at these prices, there's no shares available, right? So I asked the question directly. Hey, look, what would you guys do? Thank you for responding. I really appreciate this. I just set up a poll. This poll was only up there for a day, so if you didn't see it, if you didn't see it, you missed it. The interesting thing is I got 165 votes. 165 people came in and voted. Thank you so much for voting. I really appreciate, getting some raw numbers from people as to what they would do with their shares, right? So the question comes back. The question I asked is, what would you do with your dividend? Would you just keep it all in the shares of the new company? Would you sell some of those shares? Would you sell some of those shares and buy metamaterial stock? Or would you sell all the shares and then exchange it all for metamaterial stocks, right? Well, turns out that 73% of you guys who voted, at least, plan to buy metamaterials with the MMTLP dividend. That's awesome. That means there's clearly not enough shares. If you go back here, there's not enough shares there. And if 73% of you guys are buying back shares, there's not enough shares. Not only is that, if you look at Twitter, there's a guy, C-Plant. He did a real good job unraveling the numbers. He basically said, hey, look, you know, he had a look at the MMAX shares. These are the Canadian shares, right? There's about 93 million Canadian shares that are unaccounted for, okay? If you look between the insiders, and his insider numbers are not the same as Fintel. They're much smaller right now, 37 million shares. Okay, let me just blow this up. Okay, this is C-Plant's tweet, right? If he looks at the insider shares, he's got 37 million shares there. There's more than 37 million shares in insiders. There's about 60 million or so, okay? If you look at states, you know, so at least, I mean, these numbers are very conservative. And he looked at it and he said, hey, look, there's about 100% shorts in terms of metamaterial shorts already right now that he can already account for. And the numbers are actually worse than that. But in terms of torch shorts, if you factor in the torch shorts with the metamaterial shorts, there's 142% shorts, okay? 142% of the shares have been shorted already, okay? But that's, I mean, it's not even 142%. It's actually much worse than that, right? Because if you look at the 6 days prior to the close of the merger, right? Torchlight and metamaterials merged, and 6 days prior to that, there was a whole bunch of shares that were being shorted, right? And those shares are just, you know, there was an early closing. You know, Torchlight and metamaterials announced a merger, and they closed that merger early by 6 days. So if you factor in the fact that you got a bunch of shorts who got caught with their pants down, there's 169% of the shares of metamaterials and Torchlight were shorted, right? 169%. And that's conservative, because if you factor in the fact that the insider shares are increased dramatically, if you factor in the fact that we now have a lot more institutional owned shares, these numbers are saying that there's 40 million shares that institutions own. It's not 40 million according to Fintel.io. It's 63 million. That's a freaking lot of shares. Okay, so anyway, it's way worse than 170% shares shorted. So you factor in the fact that there's 170% of the shares that are available have been shorted. And you combine that with the fact that a lot of people plan to buy back a lot of people plan to buy MMAT with the MMTLP dividend. Factor in the fact that there's not enough shares to go around, even if that didn't happen. And it's like a perfect storm. I'm sorry. It's really, I mean, I expect MMAT is going to skyrocket and just head past the moon on this, right? You know, when moon, after people have decided to buy MMAT with the proceeds of the MMTLP dividend, it'll go past the moon, I'm sure. But again, let me state, I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So I hope you've been entertained. It is February 18th at the time that I'm making this video. Good night. Thank you very much for watching. Sorry it's so long. That is it.